What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did see a strong bounce across the board in all of the indices. Is this all just a bull trap or are we finally ending the stock market correction? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were up 0.86% and we are going to spend a lot of time going over all of the different scenarios with the price action. So by far today was a very bullish development because we did see this monster gap up, and as you can tell we did gap up about 0.9%. This is a huge gap and you cannot get a big gap like this without some sort of bullish impulse. So we did start to close the gap above, but that gap above did not fully fill. So the bears are still out there and they're still fighting to hold every little piece of that gap that they possibly can. As you can tell, the bears did win in the second half of the day and they did close SPY back below the 50 EMA. However, I still have to give the edge in the price action to the bulls, which we will uncover in just a few moments exactly why I think the bulls are still winning. So real quick here, you can see with our resistance trend breakout that we did close above the resistance trend line and we do have a huge gap below which the bulls can use as support, and that gap will fill right around 435. So we have critical support now at 435 and 433.5, which is our support trend line. And if we break back down below 433, the bears start to take back over and we're back to retesting that previous support at 429. Remember, below 429, you're looking for the next leg lower at 425, 419, or the gap close at 411. But now real quick, even though we did close back below the 50 EMA, I want to uncover exactly why I think the price action is still relatively bullish. So to do that, we need to switch over to the 1 hour chart and you can clearly see the bullish impulse of 1 hour candle that blasted through that resistance trend line. And near the end of the day, even though we did give back a lot of those gains and did not fully close the gap above, we're right on top of that support trend line, which used to be our resistance. So the bulls have a ton of support to use tomorrow. And if the bulls cannot hold up above this support level, the bears absolutely are going to take back control. So if you've been following along, you already know I'm looking for that ABC correction to possibly be ending. And right now we have a nice three-wave structure to the upside. So if we're going back on the bull, we would expect to see this turn into a 5-wave structure and we should fully close that gap and we should start to break out above 441. If we get a 5-wave structure to the upside, the next dip opportunity will be a buying opportunity and there's no guarantee we have to close that gap. But even if we don't, or we do close that gap, if we get 5 waves up, the next 3-wave move to the downside is going to be a buying opportunity. If you look at this in the long term, 5 waves up is going to be impulsive and 3 waves up is going to be corrective. So if this is the rejection and we're going down and we fully close this gap and continue to blast through support levels, this is no longer bullish price action and it was all just a giant bull trap. So look for the breakdown back below 436 and 433 to let you know this was all just a bull trap and we are going for that next leg lower. However, if we hold up above this support level and we can hold this gap and this support level at 436, the bulls will easily start blasting right through resistance, fully close the gap at 442, and we'll start knocking on the door for the next resistance levels at 444 and 446. So by far the price action is doing all the talking and right now the price action is bullish. We went over this just last night about how holding up above that support level was bullish price action, and then today we're up 0.86%. So bullish price action is going to trump all the trending, and even though we do have a downward trend, the price action is doing all the talking and right now the price action is bullish and the SPY bulls have full control over SPY on the 1 hour chart. We have a higher high and a higher low, and we have a ton of support to maintain the next higher low, which could send us into the stratosphere on SPY, even though we will expect to see a pullback from here before we go any higher. So right now, you have to be relatively bullish or neutral because you cannot stay bearish while you're seeing price action blasting out of the downward trend and getting ready to potentially go into another impulsive rally. So don't get overly bearish at these prices. I can't stress that enough. More than anything, you're much better off being neutral, but being bearish while we're blasting through resistance and potentially forming another higher low is not the correct way to play this price action. Trust me when I tell you this is a bullish development and the bulls will take this and try to run with it going into VIX Crush Friday. So jumping back over to the daily chart, watch that key resistance at the 50 EMA, which is right around 439. If we start closing above the 50 EMA and we maintain this open gap below, the bulls will take full control of SPY and we could very easily start running back up to 449 and possibly even reattempt the all-time highs at 453. Remember, there's still a lot of damage repair for the bulls, so don't just expect a crazy V-shaped rally back to new all-time highs. There's going to be plenty of buying opportunities, so there's no reason to FOMO in. And if we do get the confirmation of the bullish breakout, it will be a buy the dip opportunity, and you actually will want to buy in on the next dip and not necessarily just chase the impulsive rally. Remember, be disciplined and make sure you're only buying at support. And if you're shorting this market, you only want to be shorting at resistance. If you shorted at the resistance level of 441, you were a profitable bear today, even though we did have a very bullish price action day. Jumping over to the NASDAQ 100 triple Qs, we were up 0.92% today. And again, we see very similar price action with a very impulsive gap up. And now we have a gap to fill on the triple Qs at 360. So the bulls are playing the game the bears want to play, and they're starting to create gaps of their own. And now we do have a battle of the gap situation. The bears want to maintain the gap open at 368, and the bulls want to keep the gap open at 360. So whether or not we fill the gap at 368 first or fill the gap at 360 first is to be determined. You can easily see the bears were stepping in on a resistance trend line just below 366, and we did get a little bit of a shooting star candle print today. So this could be a lot of selling pressure above that could help us close the gap at 360. However, if we hold above 360 and that level is still strong support, the bulls can still use that to form another higher low and then attempt to break out and close that gap at 368. So the bulls do have the upper hand on the triple Qs and SPY, because even if we close the lower gaps, we still do have strong support there, and that will form another higher low. And as you know, a higher high and higher low reversal will be a trend shift. We very clearly had lower highs and lower lows. So if we start to see that script flipping and we start to get higher highs and higher lows, that will be the very early warning signs that we are reversing the downward trend and we are going back into an uptrend. So tomorrow will be very key to let us know who has more power in this market, the bears or the bulls. But right now, looking at SPY with the breakout, I have to give the edge to the bulls, even though we haven't yet seen the bullish breakout on the triple Qs. There's no reason to believe that SPY is going into a bullish breakout and the triple Qs are not. So if SPY is breaking out and looking bullish, you better imagine that triple Qs will be right there behind it. So your critical support levels on the triple Qs will be 362.5, 360, and then below that, we're coming back down to our strong support level at 354 and 352. And if we break below that, the bears take over and we're going for that next leg lower at 347 or 342. To the upside, look for that bullish breakout above 365 and the bullish breakout above the gap close at 368. On the Dow Jones, we were up over 1% today, and we see the Dow Jones looking awfully bullish with the price action gapping up and closing back above the 50 EMA. We didn't close above 348, which is our critical resistance, so we still do need to see the Dow Jones closing above that level. Our gap will fill down here right around 344. And as long as that gap is staying over, the Dow Jones bulls are in full control. So as you can tell, all of the indices are gapping up and maintaining some bullish price action that they can carry forward into tomorrow's trading session. If the bulls hold these support levels and continue to blast through resistance, the bears are going back into hibernation and we could go back into another bull cycle. Watch critical support levels at 347, 344, and 341.8 with critical resistance at 348 and 351. On the Russell 2000, we were up over 1.5% today with the price action back above all the moving averages and closing back above that key level at 222. We're still in a consolidation wedge, so the Russell 2000 isn't breaking out by any means, but we did get a very bullish gap up, and that gap won't close until we get back down to 220. So the bulls want to keep that gap open and keep the Russell 2000 above support at 222. And the bulls really need to break out and close back above 227 so we could possibly see the Russell 2000 going back into a bull market. The bears need to drive the Russell 2000 back below 219 and try to get a close below 215, which could make the floor fall out and we could see the Russell 2000 going much lower. So critical support will be 219 and critical resistance will be 227, with the trading range in between at resistance of 224 and support at 220. On the Arkk ETF, we were up 2.4% today and getting rejected right at that resistance level at 112.7. Remember, Arkk had the confirmed double top and we did break the neckline, so the price target on Arkk is still down here at 102 as long as we're trading below 115.5. So this could very easily just be a lower high situation as Arkk gets rejected at resistance and comes back down towards our price target at 102. You can stay bearish on Arkk as long as it's below 115.5. But if we start breaking back above that neckline, our price target at 102 is no longer valid, and the double top is canceled, and Arkk is getting back on the bull. So right now, Arkk is still in a very clear downtrend with a price target at 102. On the VIX, we were down 7% today, and we see the VIX getting crushed back below 20, which is a bullish development. Remember, I told you the VIX is bullish if we get back below 18.2, with the early warning sign that we're getting back on the bull if the VIX closes below 20. So as you can tell, the VIX is still in a relatively bullish trend, sitting right on top of the 50 EMA, so it's way too soon for the bulls to start celebrating now. If the bulls can get through tomorrow's trading session, crushing the VIX back below 18.2, then we could start getting a lot more bullish, and we should see those bullish development resistance trendline breakouts that I've been showing you across the indices. So watch the VIX crush back below 18.2 to get bullish, or look for the VIX to start impulsing back higher, back into the mid 20s, to let you know this was all just a bull trap and we're going deeper in the stock market correction. On Bitcoin, we're currently down 2.65%, and we see Bitcoin still holding that very bullish breakout. Now, there's been a lot of confusion on what I'm talking about with Bitcoin being a leading indicator for the stock market, and what I'm trying to tell you is that Bitcoin is a great measurement of risk on sentiment. Bitcoin had a very nice ABC structure like we see in the triple Qs, and we did see Bitcoin impulsing and breaking out to new daily highs. So this is definitely a measurement of risk on, and we're breaking out on increasing volume. So if the Bitcoin market trades 24/7 and it's going back on the bull, and we see a lot of risk on in the crypto market, there's no reason to believe that that same risk on sentiment can't creep back into the stock market as well. We had a very clear correction ABC pattern from all-time highs, and there's no reason to believe that the bull market is dying that easily, even though Bitcoin and the stock market are not directly correlated. So look at this as a risk on leading indicator that could tell us the stock market is also going back on the bull. Bitcoin's looking very bullish, and as long as we're trading above 45,000, our price target remains on Bitcoin up here at 59,000. Above 59,000, we're likely going to brand new all-time highs with the price target at 67,000. So watch Bitcoin because it is very close to having the full bull trend, and there's no doubt we had a very bullish price action breakout, so there's no reason to believe that Bitcoin is not going to continue to climb higher from here. On Amazon stock, we were up 1.24% today, and we see Amazon getting rejected at that resistance level at 33.11. So remember, I said be cautious of Amazon getting rejected at that resistance, because if we can't close back above 3,300 and stay above that level, it's very likely Amazon is going down for another leg lower, down to our support level at 31.36. So you can be bullish on Amazon on a break above 3,300, and we could reattempt to test that level as support, and then come up here to close the gap at 34.52. Once that gap closes, we could continue to run and close the gap at 35.80, but you don't want to get bullish on Amazon if it's below 3,300. So respect that resistance level and don't get bullish unless we can close above that level. Right now, there's two gaps to close above, but there's no guarantee we have to close those gaps now, even though we will be coming into earnings season very soon. So look for that breakout above 3,300 before you get overly bullish on Amazon. Don't forget, Amazon does have the full bear trend, and we are bouncing off of that support level at 31.85, so that will be another key support level to keep an eye on. On Tesla stock, we were up 1.39% today, and we still see Tesla on the bull. The price action's still above all the moving averages, and we still have the full bull trend, so if Tesla breaks out above 800, look for a quick trip to 825. Above 825, we're going back up to test the previous all-time highs, and we could see a bullish breakout and continue to climb higher from there. Tesla support levels are 765, 745, and 732. As long as Tesla's above 732, you want to stay on the Tesla bull. And if we see Tesla closing below 732, we could see Tesla going into a correction. On Apple stock, we were up 0.91% today, and we see Apple stock continuing to impulse higher, and we do see Apple closing above that resistance level at 142. We still have the full bear trend, and we need to see Apple breaking back above 145 to start reversing the downward trend. We still have the gap to close at 137, but there's no guarantee we have to close that gap now. So look for Apple to hold up above support at 142 with the bullish breakout at 145, and we will still have resistance at our trend line right around 149. So Apple is starting to see bullish price action bouncing off of 139, but it's way too soon to say that Apple's going back on the bull. So stay cautious as long as Apple has the bear trend. The financial sector was up 0.6% today, and we still see bullish price action with a full bull trend in the financials. The industrials were up 0.78% today, and we still see the price action getting rejected at the 50 EMA, and we are starting to lose the bear trend. If the industrials can get back over the 50 EMA, we could reverse the bear trend and go back into a bull market. The industrial sector was up 1.33% today, and we see the price action closing above the 5 EMA, but we still do have the full bear trend. The energy sector was up 0.77% today, and we still see bullish price action with the full bull trend. So jumping back over the S&P 500, tomorrow is going to be very critical to see whether or not the bulls can take SPY and blast through resistance and try to break out of this downtrend. Right now, the bulls are winning with the impulsive rally off of that strong support at 429, and a break back above 439 and reclaiming the 50 EMA as support will solidify the fact that the bulls are taking full control and we could be going back into a bull cycle. Watch all of these key support levels below, and if the bears are able to blast through those levels, this was all just a bull trap and we are going for that next leg lower. But right now I have to give the edge to the bulls because they're blasting through some very critical resistance and they're doing it in a very timely fashion. Don't get overly bearish when you see bullish price action. Yes, we do have bearish trending. Yes, we are still in a downtrend, but the price action is very quickly telling us that that could be coming to an end. Don't forget that I do have my own trade alert service called BANC Trade Alerts that only trades TQQQs. And with these current market conditions, I think this is the best time to be a BANC member. I'm currently running a 50% off promotion code, so now could be the best time to try out BANC Trade Alerts. You can find out all the details and how to join by clicking on the links in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.